Deepak Shenoy joins us now. Deepak, good to have you back. Thank you for joining us. The summer rally of 2023, while no one's complaining, my question is that how long the party will last?
I wish I knew. I wish I knew. I don't know if the party will continue to last forever. But I can tell you this: the markets generally hit all-time highs. It hit an all-time closing high only on Friday. When there's a lot of disbelief that has kind of been bought into, and to a certain extent, valuations have corrected from a 24 or 25 times earnings to what is about 21 times, 20 to 21 times earnings in the large caps, and even lesser in the mid and small caps. So this may not even be the party that we're thinking about, because parties start after the P of 22 or 23. So perhaps what we are just stuck with is anchoring ourselves to a number that was valid perhaps 1.5 years ago, and today it's just normal to be at that number. This quarter's earnings might tell us more, but I don't think the equity party is overheated in any meaningful way.
On the market, Tita real is actually spiking right now. It's higher by 10%. Of course, we spoke with the management earlier and they talked about how that big order that they've got in a consortium with RK Forgings, a 12,000 crore order coming in. And not just that, even going forward, the outlook for the company was expected to be quite strong. In fact, if we can, let's listen into the top bites coming in from corporate India. We spoke with a whole host of voices coming in from different sectors. Listen into what the takeaways were.
Indian opportunity is actually unfolding on a daily basis. We are in a space where there is a lot of tailwind. Our order book has grown significantly. In March 22, we were just under 1,500 crores, and March 23, we are over 27,000 crores of order book. So definitely there is a big tailwind. We are very well prepared to kind of be in the center of this opportunity, and wherever we, so for me to give you a kind of a number of what the order book is likely to be at the end of the year would not be fair. It would be more speculative. But what I can say is that there is a huge tailwind still happening. There is a big kind of thrust on the railway infrastructure, on the urban mobility infrastructure, both on the passenger side and on the freight side. So with that, we are in a good position to be able to maintain and grow this position that we have created for ourselves in this market. We are long-term debt-free. So considering that, and considering that we just got in a very marquee investor to whom we made a preferential issue of about 300 crores of equity shares just a few days ago. So we believe that, with this capital raise, with our balance sheet, with the cash that we are generating, funding of the capex is not going to be.
Anjali, Foods has certainly shot up, and there was this notice which they had given to shareholders, to exchanges rather, that they are starting road shows in Singapore, and it is mandatory for them to bring their holding down. And I'll tell you why it's mandatory for them to bring the holding downs. As per the listing norms, where the promoter has to bring it from 85% to sub 75%. Deepak, it's one of those yes and no stocks. I can give you 5 reasons why you should own it. I can give you 5 reasons why you should not own it. Let's hear your thoughts.
Which one is this?
Patanjali Foods.
Patanjali Foods. Oh yeah, of course. I mean, there are so many reasons to own it, and I think a homegrown FMCG brand deserves, with this kind of distribution, of course, deserves a larger mention. But what's happened is also quite of strange in the stock, because the promoter's given up significant upside in the businesses that the promoter independently owned to bring it into the fold of the listed company, which is relatively very positive on the corporate governance front. That makes it a little more attractive than otherwise the core business would have lent itself to. But having said that, I haven't seen the latest notice, but it's still got to prove its worth. I think if they continue to go where they're on the path they are, they might actually have something good and smart up their sleeves going forward. There is also the Ayurveda angle to the whole thing, which is attractive to a large number of consumers. which other FMCG brands may not necessarily have. So if they're able to capitalize better on that opportunity, they're not able to own as much in the space as they perhaps started out to be. But if they're able to push that forward, I think this company can be multiples of where it is. We don't have any ownership right now. We're waiting to watch how they execute going forward.
Right. And I think this perhaps must be the rank underperformers within the FMCG pack, where most of the stocks are already at a life high, if not 52-week. But let's move on. Let's get you all the chatter across the dealing rooms. Sharad is here to get us all the buzz. Sharad?
Well, yes, this week PM Modi will be traveling to USA and the drone industry will also be in focus. And also the important thing is what we are getting from the dealers is Paras Defense would be in focus as its arm Paras Aerospace is expected to win orders in the technology transfer segment. Now do remember this will be a JV between the company as well as the US governments. Now the arm is expected to develop drones based on the transfer, and the entire deal size which will be there between US and India for drones could range between the rupees 22,000 to 25,000 crore mark. Now apart from this, also the technology transfer will take place between USA, DRDO and some of the private players in India. And lastly, also the company is expected to win an automation defense order roughly between 400 to 800 odd crore rupees, which is actually the old business segment. And also India is one of the largest home when it comes to drone manufacturing as well as technology solutions. Now the stock itself, if you look at it, it's up almost 35% from March lows, and currently the market cap stands at roughly 2,400 crore rupees.
Okay, Nuresh, wanted your take, if you can, on a couple of these charts which are buzzing in the trading session. MRPL is high by 11%, Credit Access Grameen is up 9%, and then of course you have eClerx as well, which is high by 7%. Any charts that you track, Nuresh?
So Credit Access Grameen looks interesting in the space. We are seeing a good momentum across the whole financial space. Out here, the stock is setting up for a fresh breakout, so it looks promising. Even at current levels, could slowly head up higher, and has been trending well from that breakout about 1,000, 1,100. So it looks promising. MRPL is something which is on radar on dips. In the last 2 days, it has moved up as such. So would wait for some more time. If it dips back to 70, 72 levels, that is the time I would like to get in. The risk reward is not great, but the trend is still positive. So if somebody has a position, one could ride this on for a move towards 90, 95 levels.
Deepak, if I have it right, you track Z closely, right? And a lot is happening there with respect to the SCAT order. My colleague Ankur is also tracking what's happening there today. But any view on Z Entertainment?
So we're not positive. The orders pretty damning, but I think it's not enough. I feel I don't know about whether the SUT has given its order yet. So I feel that perhaps there will be a lot more investigation required to come to the kind of the positions that SEBI has on this. But it was known for a really long time. I think I first wrote about it in 2017 when a large number of promoter entities of the SL group, the promoter group of Z, had taken on loans from a lot of mutual funds through bonds. And these were non-operating companies that were issuing bonds backed by Z shares. Eventually, the default happened in 2019 or so, I think, or 2020. Then there was a fair amount of selling of shares by the mutual fund owners, who effectively brought down the ownership of the Z promoters down to 4% or something, because they sold all the pledged shares. And then there were loans given from Z effectively to entities owned by these promoters by providing a quasi guarantee on the loans that those entities took from banks, and then the banks then took the Z's money away, which is complex in a way. But then the answer to that was the money was returned. And now what seems to have been the case is that Z has apparently made a bunch of payments which have been routed through multiple entities within seconds of each other. And then the money has come back to Z, and they've been calling it a repayment of those loans. So this is, it needs more investigation and evidence, I believe, to stand muster in higher courts. But it does not speak favorably about governance inside the company, and there's never one cockroach. There will be more that will tumble out if there is a deeper investigation. So not positive. I mean, the business has always been a very good business, the only profitable media business in town, really. But at this rate, I would say only profitable listed media business in town. But I would say here that I think too many unknowns. I won't take the risk.
I'm glad you specified listed, Deepak. But let's get into BTST ideas as well. Naresh, what's on your list?
So first is a buy on Tata Power on verge of a short-term breakout about 225, stop loss at 220 and a target price of 230. Second is a buy on Bank of Baroda, which has given a breakout today with very strong volume, stop loss at 192 and a target price of 200.
Right. Rudra, what about your BTST ideas?
I'm in fact going for two sell calls, both available in future. One is a sell on Axis Bank, looking at target of around 950 with a stop loss of 973. And Can Bank can also be sold, looking at targets of 297 with a stop loss of 307.
Okay, so those are some of the stock ideas coming your way, but Skipper Limited is the stock you need to watch out for. That stock is locked in upper circuit 20% higher. There was, of course, that big order that the company bagged. We spoke with the management. They said that they're expecting 25% CAGR growth in terms of revenue for the next 2 to 3 years, and the margin on the new order is quite accretive at 12 to 13%. So that is something that the street is liking at this point of time, and that's why the stock is locked in upper circuit. You also have Mankind Pharma, which trending higher. Cyient is making a bit of a move given that DLM IPO is perhaps expected at the end of the month. On the losing side, Paytm is down. You have Marico under pressure, and KC International is also losing steam. And not to forget Adani Enterprises, which has been down as much as 4%. Deepak, apart from Z Entertainment, what is the other stocks that you're watching out for? Of course, on Z Entertainment, you're not very positive, but which are the stocks or sectors that look the most promising at this point of time?
So I think, we run a PMS, so we have a lot of investments here. So we're, talking our book in a way. But I think there's still a long way to go in the defense space. We're in the beginning of a relative, re-rating of the entire sector in terms of revenues, in terms of growth, in terms of net profits. I think this whole sector will grow multifold, whether it is the aeronautic spaces and companies in that space, or the Navy and shipyards that are building submarines and ships, or just defense equipment itself. I think there's a huge way to go here. And from the likes of, say, an M&M or a Bharat Forge that might make some parts of defense equipment to a Mazgaon dock or a Cochin shipyard, which might be in a slightly different place, but still recipients of relatively larger sums of money. I think this place has a long way to go. We have a fair amount of investments here, and also in we're starting to look at the semiconductor space. Well, again, they're very relatively new players here, very small companies, so not useful to just go gung-ho over them because they're so small, they have to prove their worth. But I think with the PLI and the relative importance of India, of semiconductor manufacturing in India going forward, I think this is going to also be a good space to be in. I'm sorry, I'm not taking too many names because we are still in the process of buying them. But I think these two spaces is something I think they will give us give much better than index returns over the next 3 to 4 years.
Makes sense. Deepak, great to have you on the show. We'll let you go on that note. Thanks as always for joining in.